Welcome back to Squawk Box this morning. E-documents company DocuSign reporting better than expected results for its third quarter. And it's been on quite a wild ride if you look at this stock. The pandemic play stock released upbeat guidance for its upcoming quarter, which prompted a pop in after-hours trading. Company now worth more than $42 billion. That's greater than Dow component Walgreens. Joining us right now with more on the report and what's to come, DocuSign CEO Dan Springer. Good morning to you, Dan. As I said, the stock has been on a ride. The company has been on a ride. I think the big question that investors are asking longer term is, this great acceleration has happened, but how sustainable ultimately is in terms of this kind of growth rate? Can we expect this kind of thing going forward?
Well, I think we're pretty excited that the growth rate is going to continue to be dramatic and successful going forward, Andrew. We look at the short-term impact that COVID has had, and obviously it's been a horrible pandemic in so many ways, but it has had some positive tailwinds for our business. But most of that, we believe, is less of the short-term change for the few sort of use cases that people have related to the pandemic, and more of a digital transformation change where people in a more secular way have realized they need to modernize their businesses. That's why we're super excited about the long-term positive growth ahead.
Long term, when you think out about this business, do you look at yourself now as an acquirer in the cloud space or an acquiree in the cloud space? Meaning, do you think this long term is its own independent entity, or do you think it gets gobbled up the way we're seeing so many other the Slacks of the world getting gobbled up by the Salesforces of the world, for example?
Yeah. Well, as a public company, to some extent, you do give up the right to determine whether someone else is going to, acquire your equity. But my strong perspective is we want to build the DocuSign Agreement Cloud. We want to build the Agreement Cloud as the next big cloud opportunity. So we will continue to be acquisitive, although we won't be a blockbuster acquirer. We will probably buy, as we have done in the last couple of years, really smart software products that we believe fit into our overall vision for the Agreement Cloud, like Seal Software we did earlier this year, to bring more artificial intelligence and advanced analytics to our overall software suite.
Well, that's what I was going to ask. In terms of growth, in terms of where you see this business, even 2 or 3 years out, in terms of what the Agreement Cloud even looks like.
Well, I think, a lot of people, when they say DocuSign, quite frankly, people still say e-signature, right? And we've sort of become synonymous with that blockbuster product that we brought to market. And I think that's fine. From time to time, we talk so much about the DocuSign Agreement Cloud and all the other, important features we're building out in the platform. And I like to remind people that signature is great. Signature has been a fantastic return on investment for all of our customers. People see that it's an opportunity to drive digital transformation and significantly improve their business results. But increasingly, what our customers have told us, it's not just about the routing around, the workflow and the signing of the agreements. They have to generate those agreements. They then have to think about the integrations and the actions that they take once an agreement's signed. And importantly, once you have a bunch of digital agreements, you need to manage them. You need to have a supporting sets of systems for doing that. That's the vision we put together a few years ago. I think it's spot on. I think it is a multi-year execution to really build out a platform play versus just the fantastic solutions like eSignature, which aren't going anywhere. They're going to continue to be, the huge driver of our growth.
Shepard Smith here. Thanks for watching CNBC on YouTube.